In this video, we're going to talk about the maximum amount of money you can get back from your taxes filing in 2022. But first, before we do that, go ahead and hit that like and subscribe button to A Penny Pincher's Guide so that we can keep putting out videos just like this and you can get notifications. So let's jump right into this video. So how can you get the most back on your taxes in 2022? Well, specifically, I want to talk about the difference between deductions and credits and make sure that you maximize your deductions and you maximize your credits so that you can ensure that you're not paying Uncle Sam more than you're supposed to be paying. And so first, before we jump into that, I want to talk about what a tax deduction is versus a tax credit. So a tax deduction is going to be something that is going to lower your taxable income, and thus that will actually reduce your tax liability. And so how you do this is that you subtract the amount of tax from your income, and this will be your adjusted gross income, and therefore what they're calculating your tax on, that income that you are now having, is going to be lower, and so your tax bill will be lower because of that. Now a tax credit is going to be something that is like dollar for dollar, and so if you are going to be paying, if your tax bill is about $1,000 and you have $1,000 tax credit, then that will wash and you'll have $0 to pay back. And so I'll give you a quick understanding of what this is. This is a good chart that explains it. What would you rather do? Would you rather have a $10,000 tax deduction, or would you rather have a $10,000 tax credit? Well, if you take a look at it, if your AGI, your adjusted gross income, is $100,000 for both of these. If you have a tax deduction of $10,000, that reduces your taxable income of $100,000 all the way down to $90,000, 100 minus 10. And that will give you, if you're staying at the same taxable rate of 25%, that is about $22,500 of taxes, and that's your tax bill. Whereas if you look at a $10,000 tax credit of $100,000 AGI, a taxable income stays at $100,000 because there is no tax deductions at that 25% rate. That will give you a taxable calculated tax at $25,000. So if you looked at $22,500 versus $25,000, the $22,500 is still way cheaper on the taxes. But if you take a look at this tax credit that you get, this $10,000 tax credit, that will then drop your tax bill to $15,000, which is way less than the $22,500 with that tax deduction. So in the end, a tax credit is going to be much better than a tax deduction. But if you can start taking advantage of and getting all of your deductions and getting all your tax credits, then that is going to be the best way that you can maximize your tax refund. And so how do you claim these tax deductions? Well, if you're going to be going online, your e-filing, it's going to catch most of these, but we want to make sure that you get all of them. And so you got to know the difference between a standard tax deduction and an itemized tax deduction. So a standardized tax deduction is going to be taking in consideration, not looking at not keeping a track of how much you've deducted. And so it depends on how you're filing. If you're filing single versus married and filing jointly, versus married and filing separately, or if you're filing as head of the household. So if you take a look at 2021, if you were single and you did not do an itemized deduction, then you would have got a $12,550 tax deduction automatically. Whereas in 2022, they have increased this by $400. Now you're getting $12,950. If you're filing jointly in 2022, it's going to be $25,900, and if you're married and filing separately, then it's going to be $12,950, which is half of the $25,900. And then head of household is going to be $19,400. And so basically, if you have not kept track of it, if you are not keeping up with this, for most people, the best deduction is going to be the standardized tax deduction. Now, what is an itemized deduction, and how do you know if you should be doing itemized deductions versus standardized deductions? Well, an itemized deduction is basically going to let you, again, cut your taxable income by taking away, that tax burden by how much you have given away, or how much you have been taxed, or how much there has been an interest in your income. And so the question is, should you itemize or take a standardized deduction? And so here's basically the summation of what you should do. If your standard deduction is less than the sum of your itemized deduction, you probably should itemize your saved money. That makes sense, right? If you have itemized more than what the standard deduction is, then you should definitely use that, because you're going to end up paying less taxes because your adjusted gross income is going to be less. So where do you find all these tax deductions, and how do you know if you meet the criteria? Well, I'm gonna actually put these into the link down below. You can see a couple different spots listing a bunch of different tax deductions, a bunch of different credits to make sure that when you're filing online on that e-file on TurboTax or wherever you're using it, you make sure that if you meet this criteria, these tax credits, these tax deductions are being placed in your basket, and so that you get these and you ensure that you get the highest tax refund. So just a couple ones that I want to talk about. These are the 20 most popular ones, and of these 20 ones are the ones that people will probably be seeing the most in this tax season. It's going to be the tax credit right here with the child tax credit. And so per child, you can get up to $3,600. That's from 2021. It might be a little bit different in 2022. There's a child independent care tax credit. There's an American Opportunity tax credit, which a lot of people will be using this one for going towards tuition, books, and equipment and school fees. A lot of people will be using that one. And then this is the same one right here is going to be student loan interest deduction. You can deduct up to $2,500 for your student loans. This is the one that most people are going to be using if their AGI is less than $57,000, and this is going to be the earned income tax, and that could be a big part here too. And this is the credit between $1,500 and $6,700 back in 2021. It might be even greater in 2022. Another one that people are going to use a lot is going to be charitable donations. If you donated some clothes to Goodwill, or if you gave money at church, or if you gave money to a charity, if you gave enough money where it is going to be exceeding the amount of the standardized deduction, in addition to all these other itemizations that you might be using, then this is going to be one that's going to help reduce the amount of you are paying on your taxes. The next one that I note that will probably happen is going to be a deduction of state and local taxes. So basically, you can get up to $10,000 off on when you're filing jointly, specifically on your property taxes, whether that's state or local income taxes or sales taxes. So if you own a house, your actual property taxes can't be deducted, and that's a great option right there. Another one that's going to tack onto that if you own a house is going to be mortgage interest reduction. And basically, if you're paying mortgage interest, the principal versus the interest, then that will be able to be tax deducted as well, will greatly decrease your adjusted gross income as well. One of the ones that you definitely should be doing, and we'll put a link up above too from our channel, is going to be that you should definitely be contributing to your IRA, and you can deduct your income based off of that as well. So if you have maxed out your IRA, then you can deduct that from your income. The 401k contribution is going to be a great one too. If you're doing something with your work, then you should definitely be doing this. If they are contributing some and you're contributing some, then you can deduct those total amounts from your income and be taxed less. Just a few more that we want to note is going to be the Savers credit. If you are, again, they're doing your own IRA, then that is another credit that you can make. Health savings accounts, these are great. And then self-employment ones. If you are doing your own at-home work, then if you are having issues with sick leave or family leave, and it's not quantifiable like it was with if you are employed through a big company, then you can get that from this as well with a home office. So again, I'm just going to put these links down in the comments down below, and you can see them and follow along with them and see which ones you meet, and make sure that your online e-filing system is giving you all the credit and all the deductions that you require. So if you got some good information from this video, go hit the like and subscribe button. There are going to be some more videos right up here talking about the best way to file online for free. And then if you want to subscribe, hit this link right here. And as always, I want to remind you to pinch a little bit.